A lot of the data we look at, Mike, still shows that the most likely outcome is a Democratic sweep. Give us an update on that as we sit here today.
Yeah, it's still the most likely outcome. And even though this is the most likely, it's not a greater than a coin flip's chance.
And so I want to pick up where we left off last time. I think last time we spoke about it, we were talking about the market's ability to predict the presidential election or the congressional outcomes. And maybe we can start with a refresher on that chart.
Yeah, refresher there. What typically happens is in the 90 days prior to election day, if the S&P 500 index has a positive return, the incumbent party is reelected. And that historically, going back to 1928, it has an 87% success rate or 87% predictive power. So it's pretty historically reliable. Basically, we think this occurs because the market is constantly trying to predict the future party that's going to be in the White House. And the incumbent party taking back the White House is a risk that the market is very familiar with and knows how to price, and that's sort of business as usual. And so the S&P is usually positive. Whereas when there's a political shift in power to a different party, that's a risk that the market has to adjust to. And generally, that means the 90-day leading up to the election, if there's a change of party in power, the S&P 500 is flat to slightly negative on average.
Given that we're at all-time highs, I'm not sure what the message is there.
Yeah, it's 2020. Anything can happen, and you have to be down for a comeback.
Yeah,
I think so that's about all you can say.
Let's talk about the reliability of the impact of the party in power on markets first, then the economy second.
You look back historically, and you take each calendar year and you break down the political makeup or the political landscape into what party has the White House, and then how is Congress made up. So is it a split Congress? Is it Democratic controlled or Republican controlled? And you basically have 6 different outcomes. What you basically find is the political party in power, if you will, or these different political makeups explain very little to none of the variability in the stock market. It's less than 5%. So we know that the things that do explain stock market returns are valuations, where we're at in the credit cycle, the economic cycle, the labor market, these types of big macro variables. And a lot of times those things are pre-existing conditions, if you will, when a new party takes power, and they have very little control over those variables. So that's the first thing off the bat is you can't look back at historical data and say, if we get a Democratic sweep, that's necessarily bad for the S&P 500. You have to take each year's election as sort of a fresh start and look at the policies and look at where we are in the economic cycle and try to see how these things interact and go from there.
Right. So clearly, where we are in the economic cycle wouldn't support a great-looking S&P return on a forward-looking basis. So perhaps maybe we start with the impact of what some of the policies, should the Democrats win the White House, how they would impact the market going forward.
Yeah, and this time around, so it's been great to see the amount of transparency that that Joe Biden has put out about his bold ideas and the Build Back Better plan. This is very well telegraphed. If Biden is elected president and if there is a Democratic sweep, the market has all the information they need to brace for that in advance, because there's so much of this information out there. So from that perspective, we think about immediate market reaction around the election. If a Democratic sweep occurs, and that is the highest probability outcome at this moment, we can see, if you look out at options market, if you look out at the returns within the US equity market, what types of companies are doing well versus poorly, there probably shouldn't be a huge market reaction because the market has seen it well in advance and prepared for it. The big market reaction would come if anything else happens, because that's something that the market hasn't necessarily prepared for.
Just in terms of looking at a Democratic sweep and looking at Biden's plan and how it's laid out here, sort of give us the key elements of this and what it would mean in terms of the size of government and the economic impact.
So the Build Back Better plan has a number of components, but the three that we think are most critical or impactful to the economy are the plans around clean energy, infrastructure, the jobs and economic recovery plan. Those are the key tenets of the Build Back Better plan, and then also prospects of changes in healthcare. So those are the three big areas. And these things together, the Build Back Better plan, are expected to cost about $2 trillion.
Let's take a little deeper look at those.
Yeah. So in terms of clean energy, we're looking at achieving a carbon pollution-free energy sector by 2035. That includes upgrading and weatherizing millions of buildings and houses in order to cut energy consumption, introduction of a carbon tax, and then funding a tremendous amount of research in battery storage, negative emissions technologies, renewable hydrogen, et cetera. Those expenditures on clean energy, combined with the expenditures on sustainable infrastructure, which these things are very related. So every city with a population over 100,000 gets a zero emissions public transportation system, a network of electric vehicle charging stations, constructing 1.5 million affordable and sustainable, environmentally sustainable housing units, and then ensuring clean drinking water. So those two elements are the big spends. And the goal is that with those initiatives, millions of jobs are going to be created.
So then contrast that with the healthcare reform that's being proposed here.
Yeah, and the healthcare reform, it's sort of an Obamacare redux, if you will, everything headed in that direction. You know, for the last few presidential elections, there have been big plans about healthcare reform. And, once you get into the nitty gritty and you actually try to make it happen, what happens is a lot of candidates fall short on their promises. So take all of this with a grain of salt. But the Biden public option, so improving access, improving transparency, and lowering drug prices are the big tenets of healthcare reform. So the Biden public option would be to reduce costs, negotiating lower prices. Tax credits, so lower premiums and calculating them based on a gold plan rather than a silver plan, and expanding coverage. That combine it with more transparency, and this is where the language on the Biden website is not too specific, but to stop, quote, surprise billing and addressing market concentration in healthcare-related markets. And then finally, drug prices. Big pharmaceutical companies are likely to be negatively impacted by these types of reforms. So forcing drug corporations to negotiate drug prices with Medicare, limiting launch prices of novel drugs, so on and so forth.
And so given all these programs, how did the plan support financing all of these things?
So this is primarily going to be paid for through tax increases, is the expectation. So you can look at how we're going to pay for this. It's in three areas. One, corporate tax increases. So increasing the corporate tax rate 7% up to 28%. Personal income taxes by increasing the marginal tax rate on the top bracket, increasing the Social Security tax. And then also on capital gains taxes. So for those earning more than $1 million, taxing capital gains and dividends as regular income. So a lot of the tax elements on the corporate side are just more broad and blanket statements, basically undoing a lot of the tax cuts that were done by the Trump administration. And then on the personal side, a lot of the tax proposals are focused just on the ultra wealthy and the very top earners.
Well, I mean, just looking at this seems to be a disincentive to hire people by increasing taxes this much, because you're looking at a 15% increase in tax on people who make over $400,000. That's a pretty substantial amount of money. That's $15 for every $100 you make now, in addition to the taxes you already pay, which would probably put you well over 50% tax rate before considering your state income tax.
Yes. And
Yeah.
so when you think about the other proposals in the Biden plan, the market can adjust to those. No problem. And we've seen the market, certain areas of the market adjust to, okay, how are we going to play this in healthcare? How are we going to play this in clean energy? This is the element that just broadly the market is afraid of, is just blanket tax increases on corporations and on the ultra wealthy. And especially, you think this would be coming at a very precarious time. We just suffered the deepest, sharpest economic drawdown since the Great Depression. Permanent unemployment rate is very elevated, and the focus should not be on raising taxes or doing anything that could potentially derail an economic recovery.
Mhm.
So for all those reasons, we think it's likely that even if there is a Democratic sweep, you probably won't have legitimate discussions on the tax increase part of the plan until maybe late 2022, once the economy has recovered and looks something like it did pre-pandemic. The other thing related to these tax increases is they are generally targeted on just the wealthiest Americans. And just important to note that that's a very small cohort of the population. And you look at this phenomenon historically in other countries, what happens is the government fails to generate the amount of tax revenue they thought they would, because a lot of the folks that would be hit with these taxes have resources and have the ability to just leave the tax jurisdiction. So these types of tax programs just on the ultra wealthy typically are not successful in actually raising a lot of tax revenue. So to think this is actually going to pay for the Build Back Better plan, or that it's going to solve the fiscal deficit, we think those things are highly unlikely. The fiscal deficit is going to most likely continue to grow, especially if there's a Democratic sweep.
Right. And I think we've seen evidence of that as we've seen people flee the high tax states already, just given the ability now to sort of work remotely and not have to be to work to live where you work. So being able to move from San Francisco to Utah and reduce your tax rate.
Exactly.
Okay, so let's just give us some perspective on the Trump side of the proposals. I don't think he's really released anything substantial in terms of how he would what he would do from a tax perspective going forward. We hear lots of things, but nothing formal. But what do we expect from him should he be reelected?
Yeah, very much in the dark. The expectation is you've seen what I've done for 4 years, and my policies are going to be similar. So just doubling down on the hawkishness towards China, and making sure that there's fair trade, and then on the tax side, potentially considering actually a capital gains tax decrease, at least while the economy is still struggling. So it's very difficult to see exactly what Trump's plan is. There isn't a tremendous amount of detail, and that's a big reason why, if you're looking for a big market surprise around the election or a big market reaction, it would be with a Trump surprise victory.
Right.
Certainly, the market's not expecting it and not really sure what that means. Which, you kind of really haven't been sure what he was going to do for the last 4 years either. So in that way, it's sort of a known unknown.
But we know it'll be perfect, whatever it is.
Exactly, and
so
huge.
and huge. Let's talk about the industries that would benefit under a Democratic changeover, and then which industries would sort of suffer under that.
Yeah. So what we've done to look at this, there's a tremendous amount of forward-looking information within the stock market, and so you look at these proposals from the Biden administration, the Biden ticket, and you can go through and identify companies that would probably benefit from these policies and companies that wouldn't. So if you think about types of companies that might benefit, multi-state operator cannabis companies would likely benefit from a Democratic sweep, because there would be an impetus for Congress to treat these companies not as just cash businesses, but allow them to have more national banking regulations. So that would be very beneficial for them. Anything related to green energy or electric vehicles would do very well. Infrastructure spending, so anything that applies materials or infrastructure services and construction, those areas of the market would likely benefit. And then areas of the healthcare market that would benefit from bringing back Obamacare, so areas of the healthcare sector. And then on the flip side, something that might not benefit would be this idea that a Democratic-controlled White House and Congress would potentially look to break up big tech because they're too large, too wealthy. So, you think of some of the biggest tech companies in the S&P 500, maybe that wouldn't bode well for them in the future. So you can create a long and short portfolio of these different areas of the market, and we've created that and called it the Biden Index, and it allows us to track what the market is thinking, on a deep internal level about the potential outcome of the election.
And contrast that to the Trump plan. I would assume, just generally speaking, anything infrastructure related will be popular across the board.
Yep.
Is that a fair statement?
Yeah, infrastructure seems like a bipartisan issue. What is not bipartisan is how it's done. So
Right.
There's this idea of clean infrastructure spending versus dirty infrastructure spending, which those are sort of blunt terms. But when you think about the areas that might do well if Trump is elected, because the market has already started to move towards a Biden presidency, it's actually just many of the opposite areas of the Biden index that we've created. So infrastructure is still in there, but much more focused on companies that would be less focused on environmental and sustainable infrastructure spending and more on just traditional infrastructure spending that we're more used to. Defense and aerospace, so defense spending, anything related to defense would likely do well. And then oil fracking. So oil fracking is something that the Democratic ticket has said that they could potentially do away with. Because of the environmental consequences, but that's not part of the Republican ticket. So anything related to fracking would most likely do well. And then on the short side, any company that's overly exposed to China trade would likely do poorly. And that is becoming more of a bipartisan issue. Whether you're Democrat or Republican, your opinion of China and the idea of China hawkishness is not just a Republican thing anymore. There are plenty of Democrats that also are talking about taking a hard line on China. So that's another one that's become a bit bipartisan.
Certainly is an interesting time for some of these issues. I think the pandemic is one thing, but I think it pales in comparison to the potential issues we might face going forward. We really haven't talked much about this, but I think it's worth considering. There is a probability that the election might not be resolved at the time of vote, that this could go on for quite some time. And we might not know who wins, sometime well into the winter or even next year. What would that type of outcome potentially do to the economy and to the market?
Yeah, the market hates uncertainty. And so what you're seeing is if you look out into the options market, the volatility markets, you can see that this year investors are paying a lot more for protection against these sort of very low probability tail risk events around the election. So the idea is, nobody knows what's going to happen, but everybody wants to protect themselves because they have a feeling something unprecedented could happen. So there would most likely be a big pickup in volatility until this whole thing gets sorted out.
Right. And we clearly, judging by this year, have seen a few things that are unprecedented.